Good morning, guys. It is Tuesday, February 13th, 2024. This is Bathrobe Business. I'm George Yoganov. I got the coffee and I got the news. So, at any moment, we're supposed to get reporting of CPI data. I'm trying to time it so that it comes out while I'm doing this video live, so I may interrupt the stories I have for you guys as the CPI comes out. So, it's scheduled, it's 6:29 here in Utah. It is scheduled to come out at 8:30 Eastern Standard Time, so that's right now. So at any moment we might get that inflation number. So I will review with you what we're expecting in regards to inflation. So inflation is expected to be up about 0.2% month to month or 2.9% for the year. So about a 3% inflation rate. We will see what comes of it here in the next couple of minutes. This is going to weigh heavily on if we're going to get rate cuts or not. As you know, I predict that we will not get rate cuts as quickly as anticipated. I think rate cuts aren't going to come until probably the third or fourth quarter. I think it's premature to be talking about rate cuts for multiple reasons. One, inflation is still very high. Has not met its target. But two, the other reason is we forget why interest rates exist to begin with, or I guess I should say the manipulation of interest rates exist. It is to cool or to spur the economy. And in this scenario, right now, the economy is doing very, very well. Every single company that is reporting record profits, record growth. Housing is up, wages are up, business is up. There's not a single sector that is not doing well. So, from a perspective of traditional economics, there's no reason why Jerome Powell would cut interest rates. So that's why I think that pressure is not there as people think. But this will be a powerful driving force of if we'll be getting rate cuts this year at all. I mean, if inflation comes out and all of a sudden we see an increase, like if for some reason it's not 2.9 but it's 3.2, I think that it almost cements the fact that we will not see any rate cuts simply because we're still in the slow quarters of the year. The economy doesn't really start going in a lot of sectors until spring and summer, specifically housing, which is a powerful influence on if inflation rates are going to be cut at all. So we'll see what comes of it in the next couple of minutes. I keep refreshing my page, but so far nothing. Okay, so let's move on to the next stories, and we'll come back to this. I'll just keep refreshing the page and see what posts. So, Bitcoin. Bitcoin has finally hit, I shouldn't say finally because they've been at this level before, but Bitcoin has hit 50,000. This is the highest it's been at in 2 years. Its record was about 60 or 69,000 if I remember correctly. I'm just going off of memory. But it looks like those ETFs are finally starting to come into play as Bitcoin hits $50,000 level for the first time in 2 years. I'm not a crypto guy, but I think that is kind of an appetizing number. I think now with it quote unquote being legitimized, it is a good position to start purchasing that ETF and moving into the crypto space, seeing as how it's become pretty much an industry security at this point. Next story I want to talk about is Coca Cola. So this is a minor story in all honesty. They just beat their revenue. For the expected revenue was supposed to be 10.68 billion, but they earned 10.85 billion. Oh, and CPI is out. Okay, so this is preliminary numbers. So I will give you further details, but consumer price index has risen 0.3% in January, more than expected, as the annual rate of inflation has moved to 3.1%. So yeah, inflation is up. Inflation is up again. So that is higher than what we reported just last month. So in January, inflation was at 2.9% year over year. It is now at 3.1, so we have seen an acceleration in inflation. So we were supposed to see 0.2% inflation. It is 0.3%. So there you go. No rate cuts. I think this really does push that timeline out. I really don't see how you can get rate cuts in the face of rising inflation once again. And this shouldn't be surprising. Wage gains are up. People are still moving jobs in order to get higher wages. I still have my employees asking me for higher wages on a constant basis. So this is not surprising to me at all. I think if you're a business owner and you're on the front line, this isn't a surprise. You know inflation is up because you see it on a day-to-day basis. So there you go. I'm going to keep refreshing so more details come out on these posts as we're going to talk. But back to Coca Cola. So Coca Cola is up about 0.2 billion more than anticipated. Now, why this is important is because I think this just shows the fact that even though their overall volumes are down, their sales are up. So it doesn't necessarily mean you're going to be down and just because the market is unfavorable to you. I think this is just simply a good lesson for anyone that's in business of, look, you can pivot and position yourself in an economy where you're not a preferential product. People are trying to avoid soda. They're trying to avoid carbonation. They're even trying to avoid traditional name brands. More and more, there's new startups and new soda brands that are coming out that are competing against it. Yet Coca Cola still remains on top because they're able to pivot and position themselves partly through price hikes, but also in controlling shelf space, also in controlling their can size. So rather than getting a large can, they've actually downgraded their can to smaller sizes because that way it becomes a treat. People don't necessarily feel like they're being gluttonous if they get a small can of Coca-Cola. And for Coca-Cola, that means more revenue because now they're selling less volume at a higher price. Next story. Oh, and the Dow has fallen 300 points after hotter than expected inflation data. Not surprising. That should be expected. So this is again in the pre-market, but the Dow is down about 300 points. I don't think that's surprising to anyone. Continuing down the story. Klarna. So this is an app I've talked about multiple times now. And I have used this product. That's why I think it's an interesting product and I think it's an interesting company to look at. They are planning an IPO. I may actually move in and invest in this when it does happen. And sorry if I sound like crap. I am still recovering from that cold, which is just not leaving me alone. But Klarna is one of the few fintech companies that is heavily investing in AI. So Klarna has had a partnership with Chat GPT almost since day one. Now Klarna is an app, right? It's just they're calling themselves a fintech company because they are. They're essentially processing payments. But Klarna is trying to be much more. If you were to ask me, I think they're trying to be the Amazon of the future. Because they're at the Amazon on the future, but rather than focusing on shipping, they're focusing on their financial structure and their financial models. So Klarna has a shopping application, so you can go in and look at deals. But how they're using ChatGPT is very interesting. They've integrated ChatGPT in order to do product analysis, so both internally and externally. So within the company, they use it to operate their deals, their imaging, security. All the staff is heavily encouraged to use AI on a day-to-day operations basis in order to increase productivity. But then they have tools like you can pull out your phone with the Klarna app, scan a product, and then instantly it gives you a selection of where you can find it online, and then purchase it directly through the Klarna app and use their financing program in order to get that product. For those that don't know, Klarna is a buy now, pay later app. And it's pretty simple. It's pretty much your dad's layaway company, but now just on steroids with fintech and with AI. So essentially you can use impulse buying and then use Klarna's application and their payment processing in order to pay it through an installment of payments for, I think it's the default is 4 payments split up over 2-week periods. Or you could use Klarna's full financing where there's an interest component as well. So I think this is a very interesting product. I think this is a very interesting company. What else is interesting is by integrating AI just from a PR perspective, they're actually raising the valuation of their company because now they're a fintech company that's using AI. And so there's a lot of chatter in the market about that because they were really the only fintech company back in 2023. More have probably joined on now. But the second ChatGPT came out, they were first on board. So they're a fintech company that's heavily invested in AI. That is definitely helping with their optics. So when they go public, it's going to be a powerful driving force of their stock price. Last story I'm going to get to is X. So this is kind of a follow-up to stuff I've talked about in the last couple weeks. So I had a video, I think a few weeks ago, where I talked about how Twitter isn't really positioning itself to be the everything app. It's positioning itself to be more of a YouTube application. So Twitter is once again heading in that direction. So Twitter, or X, I guess I should say, will introduce creator-targeted features in competitive bid against YouTube. So essentially what this story is about is Twitter is going to be offering, or I shouldn't say offering, it's going to have paid ads that will be running before videos of major creators, but then also on your news feed as well. So they are pushing very hard to be a competitor against YouTube. So essentially the same way an ad will play before your favorite YouTuber, now an ad will play before your favorite Twitter personality, whatever you want to call that. If they posted a video, their ad will play before that. This makes total sense because Twitter is really pushing video right now, which is very interesting considering Twitter was originally a text application. But now they're trying, well, I guess from day one, Elon Musk has been trying to shift it more into a video application sharing tool. It's an interesting move and one that I think most people did not see coming. He kept talking about the everything app, payment processing, etc., etc. But every move he's made since then has been about video and has been about competition with YouTube. And even the fact that he brought in a new CEO whose background is in media specifically. She worked for NBC. She's worked for major news outlets. She's worked in video media, not print media. He didn't bring someone in from the Wall Street Journal or the Washington Post or Forbes or anything that was traditional text-based. He brought in a CEO that specializes in video. So he is pushing this video hard, and he's pushing to get creators on there. Remember, he's already got Elon Musk already has Tucker Carlson, Don Lemon, and now he's pushing very hard for Mr. Beast, as Mr. Beast posted content on Twitter for the first time just a couple weeks ago, where normally Mr. Beast is all in entirely on YouTube. So this is a major shift that's happening that I think a lot of people still aren't truly seeing, as how much Elon Musk wants Twitter to become a competitor to YouTube and not to any other platform out there. I think Twitter has an application that YouTube doesn't, and that is the potential for virality that YouTube just doesn't have. And what I mean by that is you can't retweet on YouTube. If you come across a video you like, there's not a good way to share it, right? You can copy and paste the link, send it through a messenger, a WhatsApp, a text message, but there's no way to share it to a wall because you don't have a wall when it comes to YouTube. But Twitter has the potential for virality because if you come across a video you like or a post you like, any sort of content you like, you can share it to your wall and then therefore other people can see it and share it as well. So YouTube has a great amount of content. YouTube is unparalleled with content, but what they don't have is the retweet button, which Twitter has, which allows them the potential for virality that YouTube just simply can't compete with. So it's an interesting pivot, and we'll see what comes of it. I'm going to refresh my page one more time. Let's see what we have to say about inflation. And it's still the same information, so no real update. 10-year Treasury yields shoot higher as January CPI is hotter than expected. Not a surprise. So yeah, so CPI is up and it's accelerating again. So it's not just up; it's accelerated from where it was a month ago. That's pretty much it. That's the story of the day. I'll see you guys tomorrow. I hope you have a productive day. Actually, I probably won't see you guys tomorrow. Tomorrow's Valentine's Day, and I do have some plans with my girlfriend, so I may not post a video tomorrow. We'll see how the day goes. I hope you guys have a productive day. I'll see you on Thursday.